Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries lurking in corporate filings and sometimes, well, just a good old reverse split. Today we are diving into a very specific event for SharonAI Holdings Incorporated, a move that essentially shrinks the number of shares while aiming to boost its per share value. Does this signal strength or is it a sign of trouble? Let's find out. Before we jump in, if you like getting clear answers from complex financial documents, make sure you are subscribed. Also, we have a Discord community linked in the description below where we discuss these filings in real time. Come join the conversation. Alright, so SharonAI Holdings Incorporated is making a pretty significant adjustment to its stock structure. They filed to do a reverse stock split, which is basically like taking a pie and cutting it into fewer but larger slices. This often happens when a company's stock price has fallen quite low and they want to make it look more attractive or meet certain exchange listing requirements. What does that mean in practice? Well, SharonAI is implementing a 1-for-50 reverse stock split. This means for every 50 shares you currently own, they will become 1 share. So if you had 500 shares, you'd now have just 10. This also means if you had 500 shares worth 10 cents each totaling $50, you will now have 10 shares potentially worth $5 each, still totaling $50. The total value of your investment technically stays the same right after the split, but the number of shares you hold drastically decreases. On top of that, they are also reducing the total number of shares they are allowed to issue from now on. They are going from a very large number of potential shares down to about 100 million. This might be to give them more flexibility for future fundraising or to make their ownership structure look cleaner. Before the split, they had a massive number of shares out there, close to 600 million shares. After the split, this number will drop significantly to under 12 million shares. Imagine a company with so many shares outstanding. It can make the stock price appear very small, per S-hair, and that often leads to it being perceived as less valuable or even a penny stock. It is interesting to note they have different classes of stock: Class A ordinary common stock and Class B super common stock. The split affects both of these classes proportionally. It seems like they are trying to clean up their balance sheet and make their stock appear more substantial. Now, this reverse split isn't just about outstanding shares. It also impacts things like stock options and warrants. If you had an option to buy shares at a certain price, that price will go up proportionally to the split. For example, if you could buy shares for 10 cents before now, you might be able to buy them for $5 each, but you'd need fewer shares. This change is set to become effective very soon, specifically at the start of trading on Wednesday, the 24th of December. And here is something for traders to watch for. The company's ticker symbol, SHARS, will have a D added to it for 20 business days. This is a standard notification to investors that a stock split has occurred and is meant to alert the public. The good news is the actual ticker symbol SHARS for their Class A ordinary common stock will remain the same after this initial alert period. They also got a new Accession number, which is like a social security number for their stock. The official document detailing this amendment is filed as Exhibit 3.1 to their report. This is the legal paperwork that makes it all official. Now let's look at this from a bigger picture perspective. A reverse stock split is commonly used by companies that are struggling to maintain a certain stock price. It is not a magic fix for underlying business problems. While it can make the stock look more appealing to institutional investors who might have rules against buying very low price stocks, it does not in itself improve the company's profits or its fundamental business operations. SharonAI Holdings Incorporated is also flagged as an emerging growth company. This classification allows them certain leniencies in reporting and compliance, but it also means they might not have the robust financial history or stability of a more established company. When a company like this does a reverse split, it can sometimes be a signal that they are trying to avoid being delisted from an exchange because their stock price has fallen too low. The core question is, why did they need to do this? Were they facing delisting pressures? Or are they trying to reposition themselves for better investor perception ahead of future growth initiatives? We don't have detailed financial tables in this specific filing to analyze their revenue or profitability trends, but the action itself speaks volumes. It suggests that management believes the current per share price is too low to be effective or attractive in the market. The fact that they are reducing authorized shares alongside the reverse split could indicate a desire to consolidate ownership and create a cleaner capital structure. This might be a precursor to a new financing round or a strategic partnership. However, without more financial data, we are left to interpret the intent behind the action. In my opinion, this reverse stock split for SharonAI Holdings Incorporated is a tactic to improve the appearance and potentially the marketability of its stock. It does not in itself fix any underlying business issues. Investors should be cautious and look beyond the shrunken share count and higher per share price. The real test will be whether the company can demonstrate actual business growth and profitability in its future reports. The D on the ticker is a red flag for potential underlying issues that prompted this move. What do you think about this reverse stock split? Will it help SharonAI Holdings Incorporated, or is it just a cosmetic change? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more in-depth looks at corporate filings. Don't forget to join our Discord community linked in the description for live discussions. Thanks for watching, and I'll see you in the next one.